Yesterday, we heard from the CEO of Methanex. That company plans a major acquisition in the States, picking up methanol and ammonia assets in Texas. However, the stock came under pressure yesterday and it has been dropping again today. We're joined by Bloomberg's Stephanie Hughes for more. Stephanie, thanks very much for coming on the show.
Of course, Andy. Yeah, and as you mentioned, there's more troubles for Methanex. That company's stock fell as much as 5.4% today, putting it among some of the worst performers on the TSX and extending a decline from yesterday when it shared some deal news that you and I discussed then. So the methanol producer is now seeing more problems this week as Barclays downgraded the company to an equal weight from an overweight rating. This is kind of like cutting a recommendation from a buy rating to a hold. And he also trimmed the price target on the company. The analysts had some questions around issues like operating reliability, increased leverage on top of investor rotation. So he added that the amount of leverage the company is holding on to brings back bad memories from 2019 and 2020. Yesterday, as you mentioned, Methanex agreed to purchase OCI's methanol business in a deal worth over $2 billion, which analysts said could come with a trade-off as since the buyback plan would be then pushed back largely because of these leverage issues. The Barclays analysts also said this OCI ownership is an overhang on the stock, and seems that's what traders are reacting to here today, Andy.
You're also watching Kinross Gold. What's the story there?
Oh, Kinross is shining a lot today. That stock is up by as much as 6%, so it's putting it among the top of the TSX performer list for most of the trading day today. And that comes after the gold exploration company provided a economic assessment of the Great Bear project just outside of Red Lake, Ontario, which came in stronger than what analysts were expecting. Kinross said the project is expected to produce over 500,000 ounces of gold per year at a sustained cost of $800 for the next 8 years. $800 per ounce for the next 8 years. National Bank financial analyst Mike Parkins said Great Bear project shows well overall, but this is just the beginning. He also said the ore body is open at depth, which essentially means it hasn't been established where this ore body could bottom out. So given that, his team expects that this could bring in larger total resources as drilling from depth continues. That has the potential to greatly increase the value of this asset, which already has a strong starting point, Parkins said. So he also said Kinross has the chance to demonstrate Great Bear as one of the best acquisitions of the decade in this space. So it seems like traders kind of agree. They're voting with their wallets there, Andy.
And then finally, speaking, of takeovers and M&A, Fission Uranium, that stock up as well.
That's right. Shares popped off to the tune of 13% at its highest point today, Andy. And that's because Paladin Energy's takeover offer gained support from Fission shareholders after Paladin first approached the uranium company with an offer in July worth over $1 billion. Initially, the company struggled to gain traction, but it looks like they broke through that logjam today. So roughly 68% of Fission's shareholders now approve of the deal. And so next stages of the deal include getting support from the Canada Investment Act and BC Supreme Court there, Andy.
Thank you very much indeed, Stephanie, for joining us. Stephanie Hughes joining us there. Let's have another quick look at the markets.